Alright, so in this video I'll be breaking down or dissecting today's price action on gold, XAU USD. So let's get on with the video. Alright, so on the weekly time frame, you can see that the market swept the highs. Okay, creating that, higher high, all-time highs or whatever. Ever since then, the market started moving to the downside, right? Coming into this area right here. Okay, so on the daily time frame, you can see a couple things. Number one being this right here. That swept that low, and then this low right here got swept. So it comes into this little minor liquidity block on the daily time frame. Now you can see some reactions from here. Okay, you can see some reactions from here. It doesn't mean it's always gonna be like a big reaction. However, it's also with structure. Like this is the low, right, which created the high over here. So you can potentially see like some sort of smart money trap or whatever. The market can respect this area. Okay, so all right, so ever since it came into this liquidity block, the market started moving to the upside, coming for this high over here. Okay, tapping into this imbalance on the 4-hour time frame. Okay, so what ended up happening was the market sold off from here, taking out this low right here, trapping buyers. Okay, also you get your BOS to the downside and induces sellers. Okay, so came all the way down here, swept this inducement low, and then started moving to the upside. All right, so if you go down to the 15-minute time frame, as you can see, I believe this was during Asia. Market came for this, right? A little BOS, then starts moving to the upside. All right, so in this area, the market, you can see that the market's printing a bunch of lows over here, building that liquidity, and it's kind of slowing down in this area. Why? Because this is smart money's POI, right? You get your smart money traders, it comes into their POI. They're looking for some sort of break of structure, okay, and then they're waiting for that pullback to enter shorts. Okay, so as you can see on the 5-minute time frame, the market comes into this area. A couple things I'll note is respects this high right here. Okay, all right, so as you can see over here, the market's printing higher lows and higher highs. Okay, higher high, higher low, higher high, whatever. Okay, market's moving to the upside. Okay, you can clearly see an uptrend over here. You can see that little trend line or whatever. And then ever since it came into this high, the market started shifting, right? Showing lower highs and lower lows. Okay, so kind of inducing sellers. Although there wasn't a break of structure right here, the market just started inducing sellers, right, by creating lower highs and lower lows. Okay, after that, another thing to look at is this high right here is a liquidity block. Okay, so you could potentially see some reactions from here or some reactions from here. Okay, now any move that happens from here would be short term. So if you are looking for sells in this area, it would be very short term, not too probable, right? You're kind of expecting a smart money trap to occur, which it doesn't have to do. So yeah. Anyways, so on the 5 minute, let's play some price action. And as you can see, the high got taken out. Okay. Now you can expect some sort of short to happen right towards that engineered liquidity, which is right here. Right. If you go down to, well, actually off the 5 minute time frame, you can also see, you got your little channel. Okay, so you got your little channel right there. After the market traps the sellers, you can see a little sell-off to happen towards all that liquidity that was left. So all you have to do is grab this low right here, right? Because this is essentially where all the buildup happened. Printed this high, pulled lower, went higher, respected the low, respected it again, break of structure to the upside, came back, respected this area, just building liquidity. Okay. So let's play some price action. Okay. And okay, on the 5 minute time frame, you can see this little internal high got swept. Okay. Now if you go down to the 1 minute time frame, let's see some more price action and see what happens. Okay. So the market respects the high. Okay. Prints another high. You got your little BOS to the downside. And then what happens? Market sweeps the high. This could be a potential entry, right? Right when the high gets swept, little liquidity block above. If you want to be a little safer, you keep it above here, just in case the market wants to come for this high again. And then target the lows. Okay, so wherever that liquidity is, you can target that. All right, so this isn't a trade that is the best to take because you're kind of anticipating that the market has to react from here. Now it is a liquidity block, so you might see some reactions, but not all the time. Okay, so for that reason, this trade would be kind of like not too probable. Okay, but however, it still fits the plan. And okay, market moves lower, comes right here, and then goes back right here and just starts selling off. Okay, market finally comes for all that liquidity. If you want to, you could be taking some partials around here. Still gives you a nice 1-4, right? Right here. But to be honest, holding to here is pretty decent, right? Still gives you a nice 1-6, and that's essentially where all the liquidity is. Okay. So the market sells off, has little reactions, comes and ends up. Okay, you get your little BOS to the upside, inducing buyers. Comes and sweeps lows. Oh, so not only does it have a BOS to the upside, respects the low, has another BOS, and then finally comes and sweeps the low. Okay, so trapping buyers. And then after that, as you can see, what the market does is does this. Okay, So all it's doing is just respecting the high. Okay, so this right here, all it's doing is just respecting the high, building that liquidity. Okay, comes lower. However, after that, the market has a, you can say a little BOS to the upside. Okay, so essentially I want to be waiting for the market to come for the low again. Alright, so the market comes lower and comes right into here, right? So this is where you can take one entry. Okay, so it induces buyers, traps the buyers. You can have a little entry right here. You can open up your stops if you really want to, even though it's not really necessary. And then target the highs. Okay, so you can take your little partial here, it gives you a nice 1 to 9, and then target the high to the left. Okay, so say you targeted this high right here, that essentially gives you to 15R. Okay, what happens after that? Market goes higher. Okay, now that I went higher and took out this high right here, the market can low-key come for this low again. Okay, so for that reason, don't get scared just because it comes lower. The market comes lower, right? And then finally starts moving to the upside. Okay, see how deep it came to this liquidity block? The market can do that. Okay, so it took out this high, came, trapped buyers again, and then finally decided to fly to the high, right? And then like this. All right, so once the market took out the highs, I would look to move my stops below this low. Okay, a little managing the position. And yeah, pretty much. So I'll be moving my stops below this lower here, and then targeting the highs. Okay. As for partials, like I said, you can partial at this high. This is where the liquidity is, and you could hold the rest towards this high right here. Okay. So the market moves to the upside, comes down, and then just flies to the highs. Okay, comes lower again, and then finally flies straight to the highs. All right, so a little recap. Market comes into this area. Okay, this is the last structural high. Okay, so think of it this way: this is the high, this is the low, pull back, and then BOS to the downside. Also took this out right here. So smart money traders are looking at this as their POI. Okay, so they want to be selling from here. All they're doing is waiting for a BOS to the downside. Okay, and as soon as the market has that BOS to the downside, we are looking for longs towards the highs. Okay, because this is where smart money traders are trying to sell from. Okay, you got your smart money traders entering right here. Their liquidity is above this high right here, and that's essentially what we should be targeting. All right, so as soon as buyers were trapped, as soon as sellers were trapped, because they got induced right here, as soon as sellers were trapped, okay, now we're going to go down to the, let's say, the 1 minute time frame. There's a couple things you can take into consideration. Okay, the market printed this low, went higher, right, took out this high right here, came lower, respected this area right here. So you can potentially see the market come for these lows, right? It doesn't have to right away, but you can see it come for these lows. Okay, you got your little trend line, Okay, so what does the market do? Traps sellers, starts moving to the downside. Okay, comes higher, prints that high right there, comes lower. You got your little BOS to the downside. So I'm not looking to enter anything right now. And then the market has another pullback and then sells off. Okay, so even though it had this BOS to the downside, prints is slow, pulls back, sells off. Okay, so what does this show you? There's traders that are going to be selling from right here because they had their BOS to the downside. Okay, so let's say you got your BOS right here. Everyone is trying to sell. Okay, so what the market's gonna do is purposely print a high like this so it can induce sellers, trap them, and then have the real move. Okay, so what does the market do? Sells off completely. Now it sold off, but now there's engineered liquidity where? Below here. Okay, market comes, respects this area right here. This is also a structural low, so you got your SMC traders trying to buy here too. Essentially you have a bunch of different traders entering the market. So you got your smart money traders over here looking to buy. Now all they're waiting is for a BOS to the upside, okay, which is right here. Now the traders that are trying to sell, right, they got their BOS, but they haven't been trapped yet. All right, so the market comes, okay, comes into this area right here and starts building liquidity to the downside. So automatically our eyes should be right here. Okay, you got this liquidity right here, so our eyes should be right here. Okay, all right, so the market sweeps this high, but this isn't a structural high, right? You can see this is the lower high, and then this is the lower low, and this is just a pullback, and then doesn't print another lower low. Okay, so this is not a structural high. All right, so the market comes into this area, okay, reacts from here, and then comes here, respects the high. Look at that, respects the high. Get a little bit of reactions. You can say you got your little minor BOS to the downside right here. You got your little minor BOS to the downside. So more traders are trying to trade from here. Okay, so the market has induced more sellers right here. And then look how the market comes. Reacts from here for another time. And then finally sweeps the high. Okay, clearing all that liquidity that I just built, right? Induced a ton of sellers, trapped the sellers, and now this is where we would enter. Okay, so this is where we would enter. To be honest, keeping your stops above the high makes the most sense. Now if you do want to be a little risky, you can say, you know, took this out, you want to keep it above here, but I personally wouldn't do that, as this high is also a, you know, it's a high, inducement high, whatever. Okay, so taking this trade towards the lows. Right to the lows gives you exactly a 1 to 3. Right, so a decent trade. Now if you want to take it straight from here, that's completely okay. You can also wait for the tap of this right here, fill the entire imbalance so there's no more imbalances left, or you could just take it when sellers are trapped. Okay, so in this case the market does come higher, clears all this imbalance right here, and then finally starts moving to the downside. Okay, so the market does that, and then finally sells off straight to the lows. Okay, so that's about it. Gold was pretty clean. It gave a ton of opportunities, and it was very simple and easy, right? The market